All right, we're back with another section of the mindset course. This course is getting long now, but it's because there's a lot of important mindset topics to talk about. So in this one, we're going to talk about the importance of volatility, why big up and down movements are just an inevitable part of being a crypto investor, and how you can deal with volatility. So between you and a 10 to 100x return is multiple 40, 30, sometimes 50, 60, 70, 80, maybe 90, probably not 90, but maybe 80% retracements. And this is just a part of investing. Now, an 80% retracement being a part of your investing process would only really happen if you're doing highly speculative meme-related coins. But if you're doing, let's say, a Bitcoin investment, 80% returns is not a part of your sort of process unless you're intending on holding that asset over a 10-year time horizon. But for me, what I intend on doing with Bitcoin is holding it through the duration of a bull run and then selling it towards the end of the bull run. So I'm not trying to hodl it through an 80% bear market retracement, but I am looking to hold it through a 20 to 40% downtrend within a bull trend. I'm comfortable waiting a few months, losing 30% of my money in a bull trend because I know that prices are going to go up. We're in a bull trend. But I'm not willing to hold a 80% retracement on Bitcoin. But look, let's say I'm holding Toshi, more than happy to experience an 80% drawdown on Toshi on the way to its ultimate target. So here is a visualization of what good investing looks like. Let me shrink myself. This is a visualization of what good investing looks like. So you can see here, this is like the price chart of something, like an imaginary coin. You can see it goes up, it goes down. This down period that you see here cannot be removed. You cannot mitigate the fact that you will have a temporary period of losing money. Okay? A lot of people come to crypto and they think that they can buy the bottom and sell the top and buy the bottom, and they can just consistently do this throughout the course of one bull run. But it's not going to happen. You're not going to do that. It sounds good in theory, but in practice, it's not possible. And what ends up happening is when I see people trying to sell here to buy here, they end up not buying in. It doesn't get to their entry target, or they don't buy when the time comes because they're afraid or something. And then they end up losing their entry, and now price is going up. So the people who make the most money in crypto, the people who have the most success, are those who can buy at low prices, hold, and deal and embrace the volatility that comes with their portfolio ultimately going to their target, the validation of the thesis for why they bought. And you need to realize that these short-term unrealized losses, the short-term periods where you lose money, are normal and they're to be expected. The problem with losing money in volatility is if it is a permanent loss, a permanent sort of downside that occurs. That's when you get into trouble, okay? If you hold a coin at the end of a bull run and it goes down 30% and it's never going back to its all-time high, that's a problem. But if you're holding a coin early in a bull run, it goes down 20%, but it's going to new all-time highs, that's not a problem. That's just investing. So you cannot remove the volatility from your investing. You have to simply embrace it. And look, when you're doing crypto investing, the volatility that you have to deal with is much more significant than any other asset class on the planet. And you can see that here with Howard Marks' graph thing, whatever you want to call it. As the return increases, the risk also increases. So you can see here, when you do low risk investing, there's low return. Right, the sort of spectrum of returns, I think the variability of returns is what they use, is, and the prospect of loss, it is sort of one-to-one. In an asset class that has more risk, there is also more reward. Vice versa, it's like an equilibrium, right? So in a risky asset class, there is more outcomes which are significantly more volatile to the downside and the upside. So you come to crypto, cool, you just have to deal with the fact that you're going to lose 40% of your money that's in crypto at multiple times throughout the course of a bull run. And look, in let's have a look at the Bitcoin chart. Let's look at the last bull run and how many different drawdowns you had to deal with in order to... let's actually do Solana in the last bull run. What exchange had Solana? I think... yeah, here we are. Binance had it. Actually, no, that was perfect. Aha! There we go. Oops. So you can see here with Solana that during the course of this... So basically, I held Solana from $7. Where is that? Here. $7 all the way till I sold it at the Breakpoint conference, half of it, at $250. Right? 240, 250 bucks. Okay? Sold it at the conference. Now... I need a log. Where's the log at? There we go. It's better. Perfect. So I bought... where is it? Man, Solana went up so much I can barely fucking fit it on my chart. I bought here, and I sold half of it here. So from my journey, from here to here, it did not just go straight up. If you haven't experienced the bull run, you like to think, oh, it's just going to go up and it's just fairy tales and fun and there's nothing to worry about. No. Solana, at the peak value, at this point, went down 70%. Right? I had to deal with a 70% fucking drawdown just to get to my ultimate goal. But even before I got to my ultimate goal, I had to deal with a 50% retracement. Right? And then there's also this retracement here. So, price range, look, from here to here, a 40% retracement. Oh my lord. I had to deal with 3 retracements larger than 40% just to get to my 40x return target. And this is very normal in crypto. As I showed you in this photo, if you want the 40x upside, you're going to have the risk. You're going to have the volatility. Now, like I said already, volatility is fine because volatility does not necessarily mean risk. Volatility is just the journey an asset takes to realizing its price. And when an asset has to realize a much significantly different price, then there's often a lot of more volatility to get to that price. So for example, if the underlying value of a stock is like 30% higher, the volatility between now and then is not that high. But if a cryptocurrency gets tons of adoption and its real value is 100 times higher, then it's obviously going to experience a lot of volatility between now and then. And it was actually just today I told a bunch of guys in my mastermind that we bought Toshi at a $2.5 million market cap. It's now at 36 and it got to like 45 or something, right? And I said to them, hey guys, look, Toshi's up 16x from our entry. None of you should be buying it here. And I honestly think it's going to go down 80% before it goes to new highs. Because everyone on Twitter is talking about it. And Base hasn't had any inflow of users. Like there's no... For this thesis for Toshi, the idea is that we are buying before Coinbase sends all the retail investors that come at the end of the bull run to Base. So all this pumping that's happened for Toshi right now is a front running of a narrative that has not even played out 1%. The only reason that Toshi's really going ballistic is because Bonk was going ballistic on Solana, and Toshi was just the next sort of coin alongside it that sort of gained some of that traction. So I said to guys, look, I'm not selling any of my coins. You can if you'd like to, if you can't handle the downside. But I expect, let's do some fucking little art drawings here. Price range. From the peak here, 80% is here. So only a week ago, it was minus 80%. If we go down 80%, we're going back to last week's price, right? What day is this? Fucking 3rd of December. Literally 10th of December today, a week ago. A minus 80% decline is 1 week of price action. That's so stupid. So I said to them, look, my ultimate target is like a $300 million market cap to $1 billion market cap, which is going to be, let's have a look at how much further that is. So I'm looking for 100x. So, oh wow, it's way higher than I thought. Hold up. So my ultimate target is like here. Let's just put it there. That's good enough. I don't want to freak you guys out too much. And look, if you're watching this a year from now and this didn't play out, my thesis now can change by the time you watch this video, between the time you watch this video. I could have sold Toshi. If you're watching this a year from now and Toshi dies, I might have already sold it by now. So don't